In fact, we started a little late. The VCM started in the month of August. We had our first VCM in the month of August on the 8th of August. The next one was on the 29th of August. And this one is today on the 25th of August. The first VCM was on changes in income tax law in general because of the ordinance and all those things. Because at that time, the bill had not come. The bill has only come 2 days back and has got passed in the parliament. And on the 29th of August, we had a program on GST, annual return and audit. And this topic that we have chosen for today is decoding tax reforms, including enhanced scope of SFT and faceless e-assessment. So this is a very interesting topic because, as you all know, on the 13th of August 2020, in the Taxpayers Charter, and the other details had also come out on the 13th of August, enhanced scope of specified financial transactions and faceless e-assessment. The new circular came, I think, in supersession of the older circular of 12 September 2019. So all those things came around on the 13th of August. So we thought it fit to have a discussion on that. And there was no other person other than CA Chhaparia to take up these topics, because I had seen his presentation in one of the other study circles which he had made, and it was so beautifully drafted, and he's going to share the screen and show us that PPT also. So we thought that it will be CA Chhaparia, a very old friend of mine, will be the fittest person to go through these provisions. And we also have after him, we have the president of the library, CA Animesh Mukhopadhyay, is going to speak on recent developments in company law. As we all know, recently developments and taken place on during for extension of AGM and other things. So these two topics are very relevant and timely topics. So without wasting much time, I would straight away request CA Debayan, if you have anything to say, or Suman, if you've got anything to say. After that, we will straight away hand over to CA Chhaparia, because he needs at least 1 hour to explain the provisions in detail. So over to you, Debayan or Suman, if you have anything to say. If not, then we can directly hand over to Chhaparia ji.
So good evening to all the participants. I'll not waste much time. I would only request you all to be in the mute mode so that the speaker is not disturbed. Many a times wrongly we get unmuted. So please be careful that you are in the mute mode so that the speaker does not get disturbed. And the topics are very pertinent, and the speakers are also very experienced and knowledgeable in these topics. So they will share their experience with you and the knowledge. So I wish that you have wonderful learning today. And if possible, please rename yourself, whereby you can add your membership number in front of your name so that we could record the attendance in the Zoom. Thank you so very much. So if Sumanda has to tell anything, Sumanda can speak. In fact, the speaker has also started the screen sharing, and yes, sir, we are already able to see the screen. In the meantime, I don't think Sumanda has to say anything. So if there is no other formality, I think the speaker, CA Chhaparia sir, can start his deliberation on this pertinent topic. Sir, it's all to you now.
Thank you, Debayan. First of all, thank you for giving me a chance. I mean, being a part of Accountants Library, I have been a speaker here for the first time. And I remember when I started my practice, we were requiring sometimes a reference to the ITR, some senior consultancy, etc. So I used to go to the Accountants Library, sometimes at the ITAT, sometimes at the ITR Bhavan. And there I could find out the ITRs, some of the seniors' help. So Accountant Library has been a quite close to me that way. Now, thank you, Mr. Suman Chaudhury again, and all my friends who are a part of this seminar, this Zoom meeting. Friends, today's topic is so wide, especially because in the last 1 to 1.5 years, if I look at what are the announcements made, I mean, I remember earlier what used to happen, we used to see the Income Tax Act, we used to see the Direct Tax Ready Reckoner, and that used to take care of the entire year. Last year, if you remember, we had a Finance Act number 1, 2019, Finance Act number 2, 2019. This year we had a budget 2020 followed by Finance Act 2020. Then there was a press release on 24th March 2020, wherein some announcement was made by our Honorable Finance Minister, followed by a taxation ordinance. So those announcements, 24th March and 31st ordinance, that was mostly linked with the extension of the due dates, reduction in the rate of interest. I will be coming to those specifically in the later part of my presentation. Then again on 13th May 2020, there was again some announcement by the Finance Minister as part of Atmanirbhar package. Then there was an announcement on 24th of June 2020, which was to give effect of the notification, the announcements made by the FM on 13th May 2020. Then the Prime Minister announced tax reforms on 13th August 2020. Then lastly on 18th September 2020, we find taxation bill 2020, which was introduced in the Lok Sabha. So, my dear friends, we find an n number of announcements, notifications, ordinance, etc. And it becomes really tough for not only for the business community, but even for we practicing chartered accountants also, that keep a track of the things. So today, my aim will be to briefly explain the faceless assessments, faceless appeals, specified financial transactions, taxpayers charter, change in power of survey, and last and most importantly, the impact on due dates due to various announcements. To start with, let me straight away come first of all to the faceless assessment. Friends, before I start giving my presentation on the faceless assessment, let me tell you one thing, that this is one of the biggest announcements which have been made post GST. I remember that once this scheme was announced on 13th August 2020, even the department person were not aware that this scheme is about to be announced. And on the same day, on 13th August 2020, a lot of transfer orders came. And the impact of the transfer orders was that more than 2/3 of the department officers, they were shifted to the faceless regime. I mean, they were shifted to the NESC, RESC, etc., which I'll be discussing. And the judicial assessing officers, whom we have been appearing over the years, they don't have the power to make any assessment. Basically, they have only a power to do a rectification, etc. They are not even authorized to do a 148 proceedings. They are not authorized to do the set-aside assessments, etc. The entire power of physical hearing has gone away to central circle judges who are looking after the search cases and survey cases, and some TDS officers also have some powers. Other than that, so now my point here is I will be discussing in detail this faceless assessment aspects. But before that, let me explain you that there are three terms which are very important to understand the faceless assessment. One is e-proceedings, which was announced in 2018, then e-assessment announced in 2019, and the faceless assessment scheme announced in 2020. So let us first understand the difference between the three. So, we all have been handling the e-proceedings. I mean, we all have been handling the search assessment cases, wherein we are submitting the online replies. So that have been handled by ITBM module or the e-filing website to the Income Tax Department. In those cases, though we are submitting the replies online, but we know who the assessing officer is. अब क्या होता था? I have personally faced that there has been a scrutiny wherein e-proceeding is there. E-proceeding has become mandatory, and we used to file the reply in response to the scrutiny notices. The assessing officer used to call us and say, Chhaparia, the reply is not clear, the attachments are not clear, can you again send me the reply? So I told my office, okay, you send the reply again. Again, 2 days afterwards, a call used to come. Chhaparia, the reply are not visible. Then we used to check the attachment, what have been submitted, and I find that perfectly eligible. Then they said, Chhaparia, I think you play computer with problem. What you do? You submit the entire replies physically in my office. So now the whole set has to be submitted online. Again, we used to get a call from the assessing officer that, okay, you have submitted the reply, but again, I have some confusion. Can you come and meet me? So even though e-proceeding was there, even though the assessing officer was not found to have a physical hearing, in fact, he was not authorized to take a physical hearing, but then non practical purposes, even though e-proceeding had become mandatory from 2017, in fact, sorry. So even though e-proceeding had become mandatory, even though e-proceeding had become mandatory, practically speaking, it was the assessing officer whom we practicing chartered accountant used to have to appear before them to get the assessment done. Then came e-assessment 2019, wherein last year the first time faceless scheme was announced, wherein it was mentioned that there will be absolutely the dynamic jurisdiction and you cannot at all appear before the assessing officer. But again, in those cases, roughly about 40% cases were transferred to the NESC and still 60% cases were lying with the assessing officer. And only the scrutiny cases were transferred, not the 148 proceedings, set-to-set cases. So this year, what has happened in faceless assessment scheme 2020, now all the cases, all 143.3, 144, 147 and set-to-set cases have been transferred to faceless assessment. And it has been applicable retrospectively. It means for assessment 18-19, all the cases have been now transferred to the faceless, and even 144 orders, 147 orders can be passed, other than central cases and international tax cases. So with that in background, I think I've been able to communicate the differences between the e-proceedings, e-assessments, and faceless assessment. So if I find out what is the faceless assessment all about, let us read some extracts of Finance Minister's speech in Budget 2019. What it said: the existing system of scrutiny assessment in income tax department involves a very high level of personal interaction between the taxpayer and the department, which leads to certain undesirable practices on the part of tax officials. Now, this is a very hard statement by the Finance Minister, which leads to certain undesirable practices on the part of tax officials. To eliminate such instances, a scheme of faceless assessments in electronic mode involving no human interface is being launched this year in a phased manner. To start with, such e-assessments shall be carried out in cases requiring verification of certain specified transactions or discrepancies. Cases selected for scrutiny shall be allocated to assessment units in a random manner. Presently, the scrutiny selections are being done through cash, as you are aware. I mean, computer-assisted techniques. They are automatically computer selecting the case for scrutiny in most of the cases. But allocation is being done manually. I mean, in the sense that assessing officer himself does most of the assessment cases. Now, the cases of selection will be done to assessment unit in a random manner. Means that it may be possible that my assessing officer is sitting in Chennai and I am sitting here, and the notices shall be electronically sent by a centralized cell without disclosing the name, designation, and location of the assessing officer. Friends, last year around 58,000 cases were selected under the scrutiny norms, and one single officer for all 58,000 cases. And when I came to know who the officer is, that officer was posted in the NESC for only 5 days. I mean, one particular officer was on leave, and so he joined there for only 5 days. So what I'm trying to say that the officer who is issuing the notice, he has no link with the assessment records. He is simply a person whose name is there. The assessing officer is someone different. The central cell shall be a single point of contact between the taxpayer and the department. So this is the FMC speech which clearly says that in order to remove the undesirable practices, in order that the scrutiny selection can be done in a random manner, in order that it is can be done in a centralized cell without naming the assessing officer, this scheme has been done. So, what exactly is the faceless assessment? Those who are new to it, let me tell you, I've been asked questions ever since this faceless scheme has been announced by the Honorable Prime Minister. छपड़े जी अब आगे चल के हम लोगों का प्रैक्टिस क्या होगा? Friends, I still remember when I started my article C. At that time, in our the chartered firm, there were 3 typewriters at that time. And during the audit period, what used to happen, that 2 typewriters was busy for the partners, and the articles we used to finalize the balance with the partners, and then we were supposed to get it typed, get it checked, and then submit it to the client, get it signed by them, and then the partner used to sign. So this was the duty of the article to get it done. Now the problem was that 1 typewriter was there left for the articles, 2 typewriter was busy to type for the purpose of these partners cases, and we used to just try to pamper the typewriter guy. Dada mera khali kar dijiye na, like please do. So and then I still remember when I started my practice and used to file the returns. At that time there used to be a challan. Whenever we used to deposit the challans, we used to get there was a 4 copy of the challans. We used to fill. We are required to fill the 4 copies of the challans, and then we used to have to submit to the banks. And bank used to retain 2 copies with themselves, and they gave us 2 copies back to ourselves, and then 1 copy we were supposed to retain with us, 1 copy we were supposed to enclose with the IT returns. So now from there, now we are finding that first time when Altas was introduced, the TDS data of the where it used to be fed manually, because there was no way whereby we could import the data from the 26 years to the income tax return. So we had to fill all the informations one by one. And I still remember one of my clients who was engaged in the transport line. So they had more than 50,000 TDS cases. So our office has to spend 3 days, 4 days to fill in the details. And when you try to upload the data, there some comma was put by one of the article, and so the error was shown. And then again, so there were 100 times the error came. So the client told us, "Chhaparia ji, लगता है आपके office में return भरना नहीं आता है." Now it's very easy that we are importing from the. What I'm trying to say, my friends, that we have seen cases whereby whenever a new thing was introduced, GST was introduced, it was felt that it will reduce the number of works. When the online assessment has happened, again we felt something may go wrong with us, MCA. So everything, and we cannot change what is happening. What is required that we professionals have a very big challenge, because now not only we are required to keep ourselves updated with the latest amendments and the amendments which are happening like anything. As I was starting with my opening remarks, that there were, so many ordinances, so many notifications, so many amendments, and 2 Finance Act in a year. So amendments are happening like anything. So with this part, what is required is that we have to really keep pace with the way the things are moving. We have to be technologically updated. Later, क्या होता था सर कि some retired income tax officers and some non-chartered accountants, non-advocates, non-professionals, they used to get the assessment and provided they had a good PR with the officer. So now it's not possible. You have to believe in the professionalism. We have to believe in our writing skill, and then not only the judicial, not only Calcutta, Calcutta's from the eastern part of the country, we people are quite close to the academics things, unlike many other parts of the country. So if we have, I have seen people in North India, etc. also. See, in Western India, what happens? The chartered accountants, I find, are only running around because they take 2 to 2.5 hours from home to office, reach from home to office. In Calcutta, we have a time that we can make good submissions. We can do a meaningful work in that fashion. So we have an opportunity also not only for handling the clients in Calcutta, but then we can even tap from across the borders also. From Calcutta, outside the Calcutta also. So this is creating a challenges also, but an opportunity to us also. Now, what is faceless assessment all about? So it's important that those who have never handled the faceless assessment should try to get an idea about how the faceless assessment is to be handled. Uh, though you may not have handled in the past computer the e-proceeding, but then I am trying to make this presentation so lively and so easy so that tomorrow onwards you can always try that. Yes, why not me, why not I can handle the faceless assessment. So if I start with, so faceless assessment means the assessment proceedings conducted electronically in an e-proceeding facility through assessee registered account in designated portal. So we have three terms here: e-proceeding facility, assessee registered account, and designated portal. What is assessee registered account? Assessee registered account is the email address registered in the income tax India e-filing.gov.in. So, my dear friends, earlier what used to happen that we used to give our email address as a practicing chartered accountant for all of our clients, because clients were very casual in looking after their emails. So now that practice should be stopped, because tomorrow we may be caught in a very wrong pitch that way. So we should make sure, and in the e-filing we have a profile section where the email address and phone number is there. So first of all, I would advise each one of us that we should see that we should ensure, because now the only mode of communication is the email and the phone numbers. Department will be sending. There is no scope of sending the notices, etc., by way of a hard copy, speed post, or by way of uh, to the assessing officer. So since the notices will be sent to the email only, so it is important that the email is properly the current email, the email which is registered in the profile section is correct, and the profile section in the income tax India e-filing.gov.in. So the SSC registered account is what? The SSC registered account is the email address mentioned in the income tax India e-filing.gov.in. What is the e-proceeding facility? So e-proceeding facility is the, now this particular income tax e-filing.gov.in, that, so whenever there is a scrutiny now in the online era, we are required to give the replies through this website only. So this is your e-proceeding facility. So notice all the compliance made through this portal is treated as an e-proceeding facility. Designated portal is the income tax India e-filing.gov.in. So this is what the faceless assessment is all about. Yes. Now come out to the faceless assessment, because faceless assessment requires n number of amendments in the act, because in the act there may be a mode of service of the notice, there may be a so what has happened now, that section 143(3)(a) and 143 capital 3b, so that was introduced by Finance Act 2019. So 3A gave the power to the central government to make a scheme by notification, and 3B gave the power to the central government to make suitable amendments in various provisions of the act and introduce new sections. My dear friends, earlier what used to happen, that it was a 1 year and every year in the budget amendments to the act were proposed. Now, because of this section 143(3)(b), power has been given that even without the budget, throughout the year, they have a power to make suitable amendments. So, this is very challenging, because now it may be required to be, now there has been a lot of amendments happening, even though it is not a budget, finance bill, regular finance bill has been presented. So 143(3)(b) has been amended, which enables the central government to make suitable amendments, and that amendment that could be made till 31st March 2022. So these two are the sections which give power to the central government to make the faceless assessments and the amendments in the various provisions of the Act. By virtue of these two sections, notification number 61 and 62 was issued in 2019. So 261 was the e-assessment scheme, and 62 was the amendment to the various provisions of the Act, which was inserted, which was pursuant to section 143(3)(b). Then then notification number 72 was issued, which established the National E-Assessment Center, and notification number 77 regional e-assessment centers. I will be discussing about the national assessment e-assessment centers and the regional e-assessment centers in the later part of my presentation. Then what I append, pursuant to 13th August 2020, the PM's announcements, tax reforms. So notification number 60 and 61 was issued. And what was 60? 60 was the amendment to the earlier notification number 61/2019. So the e-assessment scheme was now changed to faceless assessment scheme by virtue of notification number 60/2020, and by virtue of notification number 61, the section 143(3)(b), which was there. So a lot of further amendments have happened in various provisions of the Act, and earlier notification number 62 was repealed by way of new notification number 61/2020. And finally, we find a bill number 116 of 2020, which have been recently placed in the Lok Sabha, which talks about the taxation bills 2020, which again had proposed a number of changes in the faceless assessment scheme effective 1st November 2020, which I will be discussing in the later part of my presentation. So, summing up, the powers has come from 143(3)(a) and 143(3)(b). The more clarification has come by way of these notifications 61 and 62 as repealed by 60 and 61 of 2020, and finally we find a lot of changes which will be happening pursuant to taxation bill 2020 effective from 1st November 2020. So now, my dear friends, once this scheme was announced 13th August 2020, a number of representations have been made to the CBDT that these are clarifications which are required. So a webinar was held on it's a mistake here, 13th September 2020. So whereby CBDT chairman had come, officials from CBDT had come, and one AIFTP taxation forum on all India basis. So they had joined together to have a webinar, which was attended by more than 3,000 practicing persons throughout the country. So in the webinar, the CBDT chairman and some of the officers said that yes, we will be making some suitable administrative instructions to regularize the matter. So accordingly, pursuant to this webinar, it has been finalized that 153A or 153C, that is search cases, that will be centralized with the central charge immediately. Cases where 148 or 142 notice have been issued manually will be done by REAC, National E-Assessment Center, and present assessing officer have to upload these notices to the ITBA immediately so that the assessment can be done through the e-filing website of the department. Then survey cases under section 133A having impounded material will be transferred to the central charge, and those cases having no impounded material will be handled by REAC. And verification unit, we find a number of cases whereby the cases are being set aside by the CIT appeal or the ITAT back to the assessing officer. Sometimes remand report are being asked by the CIT appeal. Now it said that verification unit, the assessing officer will have no power to give the remand report. The assessing officer will have no power to pass a fresh assessment order if the case is set aside to him. It is the verification unit which will be doing a verification with regards to additional evidence and remand reports. And if the case is being totally de novo set aside by the appellate authority to the assessing officer, then the cases will be done by the assessment unit. Now, what is assessment unit? What is verification unit? I will be discussing in the subsequent slides. So, this is a very important instruction which came on 13th September uh, 2020, pursuant to the webinar on 10th September 2020. Now, my dear friends, we have been seeing I have tried to discuss 143.3a, 3b, then earlier notifications, new notifications, and now I find that the recent bill, which was placed in the Lok Sabha in September 2020, so that is proposing a far-reaching changes in the faceless assessment schemes. So in that bill, I find that section 135A, I mean, earlier we have the assessing officer in the course of scrutiny, they used to call for information under section 133A, 9, 10, etc. Then for valuation also, they have a right to make a reference to the valuation officer. Now, what is happening here is so that everything will come by way of a scheme for doing all these verifications done by the faceless assessment units. So a new section 135A, 142B, then are proposed to be coming. Then revision of orders by under section 263 and 264. So that is a new section 264 capital A is proposed, which says that even the maybe CIT power under 263 and 264 will again become faceless. We have a charitable trust registration. So again 293 capital D is proposed to be inserted, which will have a faceless approval or registration. Then we have a reopening cases 147, 148. So a new section is proposed to come, that is 151 capital A. That will be a scheme for faceless assessment of reopening cases. And now not only that, the present name of NESC, National E-Assessment Center, that is proposed to be renamed as National Faceless Assessment Center. And again, RESC, Regional E-Assessment Center, is proposed to be renamed as Regional Faceless Assessment Center. Prosecution and compounding of offense under section 279, again, that is a new scheme is supposed to come. Appeal to ITAT. My dear friends, tomorrow is a very important day because tomorrow we are expecting that PM will announce the faceless appeal, CIT appeal cases, how the faceless CIT appeal things will happen. 25th September was the day when it was said that the PM will announce the faceless CIT appeal things. Now, again, they are saying that ITAT cases, presently what is happening in ITAT, there is no physical hearing, as you may be aware. They are having a virtual hearing at the ITAT. So now it is proposed that maybe going forward, we will have an ITAT with a dynamic jurisdiction, whereby we may not be able to know who the members are before the date of hearing. And on the date of hearing, the members, the ITAT members may be sitting in some other station. Maybe two members are there, one is sitting in Chennai, one is sitting in Mumbai, and we are representing here. So how will happen, what will come, time will tell. But again, these are all things which are in offing pursuant to RSCP Bill 2020. So this was the background of the total, I mean, the amendment in the Act, the notifications, the RSCP Bill, which is proposing further amendments, etc. Now let me come to the practical level, how to handle how the faceless assessments are being done. So the first thing, how it starts is the case is selected for scrutiny, that is computer aided selection technique, by virtue of which the cases is being selected under scrutiny, and that scrutiny selection is done by CPC. So CPC and NESC are two different departments. So once the case is selected under scrutiny, NESC comes into play. So the list goes to the NESC, and then NESC has to identify through a random basis to the computer technique which cases to go to which assessment unit. Now, once that has been done, so then the cases are being sent to the various assessment units. The assessment units have access to the returns of the assessee, and they know that this is the information which the CPC wants us to verify. So that thing also comes in hand. So based upon the return filed by the SSC, based upon the tax audit report filed by the SSC, based upon the region for selection of the scrutiny, the assessment unit or AU, they prepare a notice under section 143(2). Then again, they cannot send it directly to the SSC. They have to send it to the NESC. So at this, and then what NESC does, NESC issues notice under section 143(2) as finalized by the assessment unit, and there who is the assessing officer, because NESC is the assistant commissioner e-verification. He only signed his digital, and so but he's not the assessing officer. So nobody knows who is the person in the assessment unit who had framed the questionnaire. So NESC issues notice as finalized by the assessment unit, and then the assessee has to give a reply, and the process of assessment starts through the e-filing portal, that Income Tax India e-filing.com, which I discussed just now. My dear friends, let me repeat that section 282 was amended by Finance Act 2009, which said that all notices can be now served electronically. So there is no requirement to serve the notices manually. How the faceless scheme works. So as you see in the extreme left side, we have a taxpayer. So the taxpayer files the return, and if his case is selected by under scrutiny, so NESC, what it does, so so first of all, there are 4 units in the NESC: assessment unit, verification. 95 assessment units is there. What exactly 95 assessment units I will be discussing in the later part of the presentation. So under the NESC, because NESC is just a centralized cell with very few officers, so they are simply required to act as a nodal agency to pass on the information and to send it. They simply act as a communication link between the various units and the taxpayer. So the assessment units, verification units, technical unit, or review unit, they don't have a power to communicate to the taxpayer. Taxpayer cannot, but the activity are being done by the assessment unit, verification unit, technical unit, or review unit. So NESC comes in between. So it is acting like parda. Parde ke piche kaun hai, nobody knows. I mean, the assessment unit officer may be knowing who the taxpayer is or who the chartered accountant is, because they are knowing through the return who the assessee is. But then the assessee never know who the assessing officer behind the assessment or verification or the technical. So what is happening now? So this is the way, I mean, the overall ecosystem now, exactly how it will work. For that, let me explain you the various functions of the assessment unit, verification unit, technical unit. So what is National E-Assessment Center doing? So it is acting as a central cell between the assessee and the various units. What is the Regional E-Assessment Center? So the Regional Assessment Center is to do the E-assessment, and they have power to make the assessment. So under the Regional E-Assessment Center, we have 4 units: assessment, verification, technical, and review. So what are the functions of the 4 units? The assessment unit is the main, it is their duty to pass the assessment order. So their work is to perform the functions of assessment, which includes identification of material points, then analysis of material furnished, but they don't have a power. They don't have a power to make a direct communication to the assessee. They don't have a power to issue, to refer the case to the valuation cell. They don't have the power so they have a limited power only to examine the things and draft a questionnaire. So once they have drafted the questionnaire, what they are required to do, they are required to send it back to the NESC for sending it to the assessee. So once NESC does nothing at this stage, so as soon as the assessment unit draft a questionnaire, draft a notice, they will simply forward that to the assessee for the compliance. Now, as per the recent CBDT instruction dated 18 September 2020, all set aside cases will also be done by the assessment unit. So if the CIT appeal or the tribunal has set aside the cases de novo to be passed afresh by the assessing officer, so the judicial assessing officer will have no power to do the assessment. And my dear friends, let me tell you, the assessment unit officer in all probability will not be sitting in the same city where you are there. So in all probability, if I am filed the return and my case is selected under scrutiny, there is a distinct possibility that my assessing officer, who is a part of the assessment unit, he may be sitting either in Chennai or maybe Goa or maybe Bangalore or wherever, I don't know. So it can be anywhere. It will be randomly selection, but it will not be in the same city. The assessing officer will not be in the same city. That the computer will ensure. So now, during the course of assessment, the assessing officer may feel, the assessment unit officer may feel that I want to examine, I want to do some inquiry, some cross verification. I want to examine the books of accounts. I want to record the statement, etc. So then the verification unit come into place. So what it will do, it will request the NESE. So these are the parties to whom 133(6) notices to be issued. These are the parties to whom 131 to be issued. We want to examine the books of accounts, etc., etc. So once the request comes from the assessment unit to the NESE, what it does, it will randomly select a verification unit, and that verification unit, again, maybe the assessment unit is sitting in Chennai and the verification unit will not be in the same city. It may be sitting in Mumbai. So the verification unit will start sending the notices, recording of statement, etc. So that will be their job. So now in the course of assessment, if the assessing officer feels that I want to do forensic audit, I want to get the valuation done, I want to have some information technology assistance I require, transfer pricing assistance I require. So in that case, what he can do, for a special, the assessing officer feel that he wants to get the special audit done. So then he will again request to the NESE, and NESE, for doing this kind of technical assistance, the NESE will pass on that thing to a technical unit. Now again, technical unit may be in some other city, and they will do these kind of things. So whenever a verification unit perform the functions as requested by NESE, so they will forward the report not directly to the assessment unit. They will forward the information, they will forward their inquiry report to the NESE, and NESE will send across. Now the assessment unit does not know who the verification unit officer is. NESE come in between. So there is no interaction between the verification unit officer or the assessment unit officer. Even the technical unit officer does not know that who the assessment unit officer is. So they do the special audit or forensic audit or whatever it is, and they forward the report to the national NESE, and NESE in turn forward it to the assessment unit. So the assessment unit does its own examination. It gets information from verification unit. It gets information from technical unit, and based upon that, it is supposed to prepare a draft assessment order. Now, if the draft assessment order matches the risk profile of the CP of the NESE, in that case, that can become final. But again, the NESE have a power to refer it to the review unit. Again, review unit may be in some other city. So the review unit is to review the draft assessment order to see the arithmetical accuracy, legal points, judicial pronouncements, whether the additions have been made properly in the draft assessment order. So we find that there are it is a team-based assessment whereby the primary work of assessment is to be done by the assessment unit, but it has to take help from the verification unit and technical unit, and finally his order, draft assessment order, is subject to review by the review unit. Now, my dear friends, with that in background, let me tell you that there will be 95 assessment units, 35 verification units, 20 review units, and 4 technical units. The technical units will be sitting in the 4 metro: Calcutta, Delhi, Mumbai, and Chennai. So now each assessment units, my dear friends, there are 95 assessment units. So each assessment units will be headed by one CCIT. Under him, there will be a PCIT. Then each assessment unit will be having a 4 additional CIT or 4 joint CIT. And then each additional CIT will be having a one ACDC and then 5 ITOs under him. So 1, 2, 3, 4, 5, 6, 7, 6, 4, 24, 26. So 26 officers roughly will be there with one assessment unit, and then 95 assessment units. Again, in the verification, in the review units, we have a CCIT, PCIT, 3 additional CIT, and then this is the hierarchy. Then again, in the verification units, we have a CCIT, PCIT, 4 additional CIT. Then technical units also, this is the hierarchy. So how the assessment will happen? The assessment unit will prepare the draft assessment order. So the assessment unit will prepare the draft assessment order, either accepting or, so there are two options available with the assessment unit. Either it accepts the return or it makes some additions in the return. So once it prepares a draft assessment order, it sends it to the NESC, and NESC have their own software. Without any human intervention, they have a software which will have identified the risk management strategy and the automated examination tool. Now, the software will check that these are the parameters for which the cases were selected under scrutiny. These are the risk. These for us, the SSC may have done these wrong things, etc., etc. These are the ratio analysis which was a problem there. So if they find that the assessment order has taken care of everything, the software, there is no human intervention at this stage. So if they find that the assessment order has been prepared as per the risk profile of the income tax department, so then if there is no modification, so they will finalize the draft assessment order and send the assessment order to the assessee. If they find that the risk management profile is not matching, so then they have to refer it to the review unit. So again, it will be done through the computer system only. And if some additions is proposed by the assessment unit, then NESC will, and if it matches the risk profile of the computer, so then NESC will issue a so-called notice if any addition is proposed. Now, once the matter has been referred to the review unit have two options. One, they agree with the draft assessment order. So if they agree with the draft assessment order, then NESC will do nothing. It will send, and if there is no additions there, so in that case, the NESC will do nothing. It will finalize the order and send it to the SSC. If there is any modification to be done in the draft assessment order, they will suggest the modification and send it to NESC. NESC can have two options. Either it will send it back to the same assessment unit, or it may refer to some different assessment unit. Again, that thing, they have the options. Now, assessment unit, what they have to do, whatever is being suggested by the review unit and whatever was suggested by them in the original DAO, so they have to prepare a final DAO, final draft assessment order. My dear friends, I have heard a term called assessment orders. Now we are having a draft assessment order, and we are having another term called final draft assessment order. So the assessment unit will then prepare a final draft assessment order, and again it will send it to the NESC. And if the additions is being proposed, the NESC will issue a so-called notice. So before any additions is being made, SSC will get a draft assessment order which is proposed to be passed. This is very interesting because till now, what we have been saying over the years, that we are getting the assessment order, we are getting the assessment orders with additions only. Going forward, we will see a situation, and my dear friends, we should be prepared that we will be getting a lot of so-called notices after December, because the compliances date have been extended till December. So from January, the SSC need to comply, and once the SSC starts complying with the notices, so again the things will move very fast. So maybe in the month of Feb 2021, we will be finding out a number of cases where so-called notices are being issued, and at that time, those chartered accountants, those professionals, those test practitioners who have some writing skills, so they will be getting a number of cases referred to them to reply to the so-called notice. So once you get a so-called notice, the SSC has three options. One, they do not reply to the so-called notice. In that case, the draft assessment order becomes final. Second, they prepare a reply based upon against the draft assessment order, against the so-called notice, they give a reply. Then the assessment unit has to consider the reply and finalize the assessment order. My dear friends, if any addition is being proposed and you want to go into appeal, we have to make sure that at that level, we have to prepare the reply. And my dear friends, uh, we may be not getting much time there. And secondly, being in the tax department, sometimes we are not having access to the various factual information which the SSC may be having. So we really need to be quite fast enough and try to make sure that if the time limit is given for say 15 days, so then the gateway will be closed after 15 days. So what will happen? And sometimes because of technical hitches, because of over pressure of the computer in the last moment, so if you're not able to submit the reply on the last day, so then you will not be able to reply at all, and the client may be saying that you're not. We should try to make sure. We should try to make sure that we are preparing the reply. At least we should, whenever we are getting a time of 15 days, we should think that the time is 12 days only. 3 days we should leave for the purpose of scanning and for the purpose of uploading the information in the computer. And once we get the so-called notice and once we have a right to ask for the virtual hearing, again it is the principal, it is the CCIT's call whether to allow the virtual hearing or not. So, but then we have a right to ask for the virtual hearing. Again, virtual hearing, what to be allowed, what not to be allowed, that will be notified subsequently as scheme is supposed to come. For the purpose of virtual hearing, the department has made one point that either virtual hearing can happen from your own office or the department will be setting up a virtual hearing center. So those SSCs who do not have the computer systems or the video conferencing facility in their office, they can go to the specialized center in the department after taking a prior timings, and there they can do the virtual hearing. Question is whether we will be getting a recorded version of what is happening at the virtual hearing. As per the webinar, yes, whenever there is a virtual hearing, so the SSC have a right to get the recorded version of what has been what has happened at the virtual hearing. So now there was a perception that that a lot of cases adverse additions will happen because of this faceless scrutiny. My dear friends, first of all, let me tell you, and which our Honorable Prime Minister was telling, that India is a country having a 130 crore population, where only 2.5 crores people are those SSCs who are filing the returns, and only 1.5 crores are the SSCs who are paying the taxes. So I repeat, out of 130 crore people, only 1% of the persons are there who are the people who are paying taxes. So now, if you see the, I mean, I am getting disturbed. Can you mute all? I mean, I think somebody's voice is coming in between. Yes. Am I audible? Hello.
Mr. Chhaparia, please go ahead.
Yes. So what is happening was that there has been a perception that number of cases under scrutiny will get increased because of this faceless scrutiny. So let me tell you that the number of scrutiny selection was around 0.94% in financial year 12-13, which has reduced to 0.26% in financial year 18-19. So in financial year 18-19, around 1.25 lakh cases were selected for scrutiny, and out of that, 58,000 cases were being transferred to the e-assessment or the faceless assessment scheme. And my dear friends, it is very important to understand what has happened to the 58,000 cases. And this is a very eye-opener to us. This information I could get from one of my department officer friends. So he said that out of 58,000 cases, which was selected for scrutiny in the faceless scrutiny in the first page, till 16th of August 2020, till 16th August 2020, no reply was submitted in 20,000 cases. My dear friends, out of 58,000 cases, 20,000 cases did not reply at all. And in 10,000 cases, SSC had replied and department has already prepared the draft assessment order. And out of 10,000 cases for which draft assessment order has been prepared, the cases which have been selected for review, only 3,000 cases and 9,600 cases order have been passed favorably. And so only 300 cases, so-called notices have been issued. So now, my dear friends, those who have complied in the first phase, you can see that only in 3% cases there has been additions or the so-called notice, and 97% cases the orders have been passed favorably. So what will be the field officers doing in the department? Those who are not in the faceless wing. So 1/3 of the department strength will be doing the judicial officers, and they will be only doing the rectification. They will be doing the demand management. They will be passing the appeal effect. They will have a power under section 263 and 264. They will have a power for prosecution and compounding. Now, my dear friends, rectification proceedings power presently with the judicial officers. Now, in the RACP bill 2020, I find that the rectification proceedings power may get diluted to the faceless wing. Again, demand management, recovery, stay power is with the judicial assessing officers. Again, that may get diluted. Appeal effect power is also may get diluted by to the faceless wing. So going forward, what will the assessing officer who is sitting, the judicial assessing officer will be doing? He will be only having the custody of the case records. He will be handling the grievance. He will be educating the taxpayer. He will be doing the audit reply to the audit query, etc., etc. So, I mean, it's a sea change. Till 13th August, those officers who were thinking that yes, this SSC is mine, going forward, they don't have the power to do anything. I mean, not even the collect the taxes, not even the pass any order, not even so they have only right to, I mean, custody of the records and the audit functions, audit query, etc. So what is going to happen going forward? That out of 6,000 officers on all India basis who are in the department, roughly 4,200 officers will get transferred to the faceless assessment charges, and 1,900 officers will remain in the field. Coming to Kolkata presently we are having a 17 principal CIT. In future we will be having at least 7 PCIT. Those who are practicing in income tax, they may be knowing that in Calcutta there are 15 ranges, range 1 to range 15, which are doing the company assessment cases. And in each range, we are having 2 ACDC. So there are 30 ACDC, AC/DC who are doing the company assessment cases in Calcutta presently. So it will get reduced to only 6 cases. I mean 6 officers. So they will be out of 30 ACDC, only ACDC will remain here. So So we will be having only 7 PCIT in Calcutta and only 2 CCIT who will be there, who will be handling the judicial charges. CCIT 1 and CCIT 2. Now, so personal appearance can happen only in some cases where the SSC says that in a proper notice, the SSC says I want to give a reply, or where the verification unit wants to do the 131 or at that time.
82. 800230.
Some issues are still unresolved. For example, what will happen to the present penalty proceedings which are yet to be time barred? Because most of the penalty which was supposed to be time barred in June, the time barring passing of the order has been extended till 31st March 2021. So, question is whether those penalty orders will be passed by the judicial assessing officer or faceless assessment assessing officer. Time will tell. Again, we have a section 144A. Sometimes we request a direction from the JCIT and additional CIT under section 144A. The faceless regime is totally silent on how it will happen. Sometimes the assessing officer converts a limited scrutiny into complete scrutiny cases by the approval of the CCIT or CIT concerned. The faceless regime is silent on how the cases of limited scrutiny will get converted into scrutiny. My dear friends, what are the advantages and disadvantages of faceless? The advantages is that that all the notices, all the replies submitted, presently we are required to keep a huge bunch of the photocopy of the documents which have been submitted to the department because the case may get reopened within 6 years. So now everything will be available in the income tax filing site. So the assessment, whatever replies we have submitted, that we can always assess. Then the challenge is that whose satisfaction will be important. NESC or assessment unit or any officer of assessment unit or verification unit or the technical unit, time will tell. There will be a lot of time and money which will be saved because presently we are sometimes sitting in front of assessing officer chamber who calls after 2 hours. Sometimes the peon of the officer, we are trying to make him happy so that we can be called inside on a priority basis. Now going forward, what will happen? Nothing like that. So we can always, I mean, so that we are saving a lot of time and money as far as chartered accountant is concerned. So what is most important is to improve the writing skills. We have to know our facts. We have to know our facts quite well. Whenever we are replying, we should mention the DIN number. As you are aware, from 1st October 2019, any notice issued by the department should have a DIN. So whenever replying to anything, we may mention the DIN number as per the thing. Then, if the reply is submitted by the AR should be added in the that particular proceedings, and then it should respond in time. We should have a positive approach because sometimes what happens that they are saying that sir, you are that raised by you is incorrect. I mean, we should, because that officer has his own limitations, so we should try to explain him with a positive approach. Then mention the legal position as and when required. With this, I have completed the my presentation on the faceless assessment. Now, I am coming to faceless penalty. Then I will come to the other part of the presentation. So, faceless penalty, as I discussed in my earlier thing, that faceless penalty, present pending proceedings, whether it will be done by the faceless regime or by the judicial officers, that time will tell. But the assessments which is being passed by the faceless assessments, for those cases, the penalty will be done by the faceless assessing officers only. These are the penalty sections which are proposed to be given power to the faceless regime. Penalty for misreporting, 271A, 270, all these penalty sections are supposed to get covered within the faceless regime. Then tomorrow, 25th September 2020, as announced by the Honorable Prime Minister, announcements are supposed to be made tomorrow by with regard to faceless appeals, and it is expected that going forward, the all the appeal in the CIT appeal may be heard by an officer who is not sitting in the same city, and we may not be able to know who the officer CIT appeal is. But then some exceptions to the faceless appeal will be those cases which are search-related cases, international taxation cases, black money and benami property cases. So those cases will not get transferred to the faceless appeal cases. What exactly will happen tomorrow, we are expected to know once the PM announce. And subsequent to the PM announcements, it is expected that some notifications, etc., will be coming. Friends, one very small change with regards to power of survey. The presently the survey can be done by the assessing officer, TDS officer, as well as the investigating officers. Now, pursuant to the order dated 13th August 2020, the income tax survey can only be carried out by the DGIT investigation or the investigation, and the TDS charges only to the extent of TDS verifications. Friends, SFT, Sumantra was saying about SFT, some far-reaching changes which are coming to the SFT. Now, my dear friends, SFT, those who have seen the 26 years reports, I mean, their 26 years annual tax statement of this year of the assessee or themselves, they must have found that not only the tax payments, but also some other transactions are being reported in the 26 years. SFT, what it is? SFT is the specified financial transaction is a report filed by specified persons under section 285BA of the IT Act, which records transactions exceeding threshold limit, including investments and expenditures done by the taxpayers in a particular financial year. So there were significant changes in the SFT norms by section 2 by way of introduction of section 285BB by Finance Act 2020 with effect from 1st June 2020. And pursuant to that, in July 2020, the government had launched a revised Form 26AS, which included not only the tax payments, but also the high value transactions, which are directly visible from the 26AS statement. What I'm trying to say, for example, a cash deposit in savings account more than 10 lakhs, if the SSC is done, so that will get reflected in the 26AS. If you have cash deposit or withdrawal in current account more than 50 lakhs, that will get reflected in the 26AS. So these all informations which are part of the SFT reporting as per present laws. So these were presently what were happening. These informations were the exclusive domain of the income tax department, and the SSC was not aware what are the information which are there in the records of the income tax department. Now going forward, these informations are being captured and transmitted and transferred to the records of the assessing officer as well as to the records of the CPC, and the CPC in turns give these informations by way of 26 years. So if you are making credit card payment more than 10 lakhs rupees in cash, or more 1 lakh in cash, or more than 10 lakhs by way of check, if you have received share application money more than 10 lakhs, if you have applied for any bonds or debentures more than 10 lakhs, if there is a buyback by a listed company, immovable property purchase of more than 30 lakhs. So all these informations if will get reflected in our 26 years. My dear friends, what is important here is the proposed transactions as announced by our Honorable Prime Minister, which are supposed to be covered into SFT. And this is very, very dangerous. If you see these transactions, then maybe I am foreseeing that tomorrow even all the locker numbers will be linked with our PAN. So I tell you how. Because if we find lot many associates as well who are not filing the return on the ground that they are having exempt income. But if you are paying educational fees or donation to educational institution of more than 1 lakh per annum, so that information, that educational institution is required to take your PAN, and then that educational institution is required to inform to the income tax department by way of their SFT returns that this particular person has paid more than 1 lakh rupees towards the educational fees, and that information will get captured in your 26 years of next year. Then if you have paid a property tax more than 20,000 rupees, if you have consumed electricity more than 1 lakh rupees per annum, if you have purchased jewelry, white goods, marbles, paintings exceeding 1 lakh rupees, payment to hotels more than 20,000 rupees, any business class travel, life insurance premium more than 20,000, health insurance premium more than 20, life insurance 50,000, health insurance 20,000, deposit and credits in current account 50 lakhs. It is not talking about cash. So all SSC must be having a deposit or credits in a current account of more than 50 lakhs, non-current account more than 25 lakhs, bank lockers, demat account, share transactions. So what is going to happen? Maybe it is yet to be notified. Once notified, there may be notification that the banks will be required to get the PAN details of all their lockers, and maybe going forward that bank locker details will be available in our 26 AS, and there may be a situation that we are supposed to mention these informations voluntarily in our IT returns, and these informations will be coming in our 26 AS also. So this is high time that we should educate our clients also. So this notification though has not come, but this is in the department's thing to just to have a monitoring over the entire each and every investment and the consumption pattern of the SSE, and so that will be reflected in the 26 AS. Earlier, what used to happen that the department used to hit us from the behind, so they did not share the information what they were having. Now going forward, the department is saying कि हम तो कुछ छिपाएंगे नहीं, ओपन लड़ाई करते हैं, आपको सब चीज बता देंगे आपके पास में. Either you voluntarily incorporate those in your returns, make sure that your income profile matches with these expenditures and investments, else there may be serious problems. So now the problem is that with the income tax department is these informations, they are not they are getting it automatically because it is the educational institutions who are required to inform them. It is the property tax, the municipal corporations who are required to inform them. Electricity company are required to inform them. They are not required to collect these information. These informations by way of SFT returns, it is coming automatically to them. And once they get the informations which are having a PAN number, the income tax they will disseminate those information to the SSC, to the CPC, and then the 26 years, etc. I think time is short, so I will be discussing taxpayers charter very briefly. So the taxpayers charter. See what is happening. Citizen charter was there. I mean, what is taxpayers charter or citizen charter? Citizen charter is the department assesses rights and duties. So, but then it has been there since a long period of time. I mean, 2014 onwards it was revised. But then existing citizens charter had no statutory backing. But the finance minister on 1st Feb 2020 in the budget speech, she said that any tax system requires trust between taxpayers and administration, which will be possible only when taxpayers' rights are clearly enumerated. So in the Income Tax Act, we hardly find that what are the taxpayers' right. I mean, even if we are applying for the certified copy, I mean, that is not mentioned in the Income Tax Act. That is pronounced by some judgments and the Code of Civil Procedure, etc. So now the taxpayers' charter is something which is clearly mentioning what is the taxpayers' right. So, and that has now the statutory force because of this, because of insertion amendment of insertion of section 119 capital A with effect from 1/4/2020. So so many countries in the world, so they are having a taxpayer charter like Australia, Canada, New Zealand, etc. So what are the part of the taxpayer charter? It says that one that provide complete and accurate information. So one thing, point number 4, one thing is very important, that the department shall provide accurate information and fulfilling compliance. So department will not hide anything before making any additions. They are required to open up the information to the SSE. Then each and every orders, each and everything, the department should have an inform. Sometimes we are required to file a writ petition because there is no mechanism for going into appeal. So so the department shall have that mechanism will there. So these are some of the taxpayers charter which are there. Then the department, I'm not discussing in length on this topic. You can always have a look, and whenever any assessment question is going on, sometimes make a reference to this text-based charter to find out which particular point can be important, and you can make a suitable reference of the text-based charter that now it has a statutory backing, and so you are supposed to give this information, etc., etc. So with this, now I'm coming the last leg of my presentation, that is the extension of due dates pursuant to the various announcements. So, so the first thing is the recent bill, which was introduced in the Lok Sabha on 18 September 2020. There has been a lot of confusion that because of this bill, the due date of filing of the return has been extended. And let me tell you, I have carefully gone through the bill. The due date of filing of the income tax return for financial year 1920 had not been extended. So the due date stands at 30th November as was announced pursuant to the earlier ordinance and 31st March 2020 read with the notification earlier. So pursuant to this RSCP bill, it has not been amended. The tax audit and other reports due date stands at 31st October 2020. Then TDS and TCS statement, some dates have been changed pursuant to this RSCP bill. For the TDS TCS statement up to February and March, so the due date has been 31st July, which was extended by way of notification dated 24 June. Then TDS certificate due date was extended till 15th August. And there has been no relaxation on these dates by RSCP bill. But for the TDS statement for financial year 2021, for the first quarter, that is June 20, and the second quarter, that is September 20, the due date of filing the TDS and TCS returns has been extended to 31st March 2021. My dear friends, but the date for filing the TDS TCS returns for December has not been extended. So what is interesting to note here is that for December, you are required to file the return prior to March 2021, but for June and September, you are getting extended time to file the TDS and TCS returns within March 2021. Coming to the assessment cases, by taxation ordinance dated 21st March 2020 and CBDT notification dated 24 June 2020, the date of passing various assessment orders have been extended. Now, what is happening here is that for assessment 18-19, the earlier assessment due date was passing of the assessment order was 30th September 20. It has been extended till 31st March 21, and so these are the dates which have been extended. So more or less, no assessment is due in September. So all assessments which have been due in September have been extended till 31st March 2021. Those assessments which were due to be passed in March 2021, those have been extended to 30th September 2021. Compliance date, lot of notices have been issued. So it has been said that even if you don't comply with any notice issued by the department, full time limit for compliance is between 20th March to 31st December 2020. So you can make a compliance after December. There will be no adverse inference drawn for the purpose of delay in compliance. There is a reduction in the tax rates, I mean, for financial year 2021. So the 75% of the interest will be levied if the tax payment was due till 29 June. Then again, RACP has not further extended the date for making payment of ATC 54, 15G, 15H. The belated returns for financial year 18-19, again, the due date is September 20. No further date has been amended. Aadhaar and PAN linking, the due date has been now extended to 31st March 21. And the tax audit report, GAR provisions was supposed to be reported in this tax audit report. It has been deferred by 1 year. Friends, before I come to end, let me come to one of the last very important presentation. So one very important announcement was made by Finance Act 20 that all the existing charitable trusts were required to reapply for the fresh registration with effect from 1st June 2020. Because of this COVID-19 thing, 8th May 20 announcement was made by press release that this is extended. The fresh application is extended, and now fresh application has to be made from 1st October 20. Now, by RACP bill, it is proposed to defer the implementation of this new provision from 1/4/2021. Friends, with this, I have tried to cover up the following points. One is that I have tried to cover up business assessments, business appeals, SFT, taxpayers charter, changes in the power of survey, and impact on due dates due to various announcements. Thanks all of you for listening to me and have a patient hearing. If you have any questions with respect to my presentation, I am here. So with this, I'll now hand over my things to the organizers so they can take it forward. Thank you very much.
Thank you, sir. You have given a very knowledgeful presentation. I'll request Animesh da. Animesh da, are you here? Sumantra da, are you audible? So I'll just wait for the minute for some 5 minutes for the participant to ask their question, and then I'll request Animesh da to start his next session. Thank you, sir, for your presentation. You can find in the chat box if there is any question for you in the chat box or not. I can't find any chat box. If anyone has put up any question directly to you, you can find out in your chat box.
Yes, 100%. Any question from anyone?
Samanto,
Yes,
would you please request Chhaparia to give this PPT to the registry?
yes. That is there.
We'll be
No
very
problem.
grateful to it.
Yes, it is a fantastic PPT, I must say.
Yes, please.
Very,
Thank you
very
so much.
informative and very good,
Very
very well
great and very
prepared.
interesting. For last 1.5 hours, we could not even think of having even a cup of tea. This was so interesting. Thank you, Mr.
Yes,
Chhaparia.
yes.
Thank you very much.
Sumantra, can I carry forward with one question?
Yes. You ask one question, no problem, please.
I have a question regarding the filing of tax audit report. From this year, in the tax audit report, UDIN has been made, a column has been introduced to put the UDIN number, but it is an optional. It is not mandatory. But once the UDIN has been used in one tax audit report, this 3CD or 3CB, it cannot be reused. But for any of the wrong attachment, if the things is not accepted by the client and the tax audit is not rejected or not revised, then also they are not accepting the same UDIN. So is there any solution to it? Mr. Chhaparia?
Sir, we have raised these concerns to the CBDT.
Yeah.
And CBDT, because just a couple of days back, what had happened was that we have So a couple of days back, we had a meeting with the CPC, and today morning I got the various replies from the CPC with respect to this query, including the query raised by you. So I'm yet to get into that. I'm yet to go through those details. So I will be sharing whatever has been received from the CPC. I mean, CPC last week, one program was organized by the AIRC with some of the officers of the CPC. Central Processing Center, Bangalore, whereby we had drafted certain questionnaires which were problematic to us, and then CPC came with those clarifications, and then finally today morning I find that they have compiled the various queries raised by us, and they have prepared a PPT on that. So what I will do, first of all, that tomorrow I will be sharing that PPT to the regional council. They must also have got that by this time, and regarding your specific query, let me go into it and revert you within a day or two.
Thank you, sir. Thank you.
Any other question? Any other question from anyone? Any other
Wonderful.
question?
I think so. Let me conclude then with that.
Yeah, thank you, Mr. Chhaparia.
Thank
Thank
you.
Hello.
Thank you. Animesh, to me.
Yeah,
Oh, sir, आपको मैं अभी I saw you just now. Thank you. You
no,
are a
after,
privileged speaker.
yeah. No, it was excellent deliberations. Excellent.
Thank you, sir. Thank you.
Thank you, Chhaparia. Thank you so much. We cannot give you a memento now due to the due to the pandemic, but maybe
Yeah.
sometime
Sir,
later we can.
being a part of accountants library, it's a thing which I will have a memory.
Thank you so much.
Thank you. Thank you.
Thank you. Animesh, now you take over the recent
So
developments in
let me
company
just
law.
screen share the
Yes.
thing first.
बंद कर दीजिए, चैनल तो बंद कर दिया ना।
So is it now the screen is, I mean, is it properly shared?
Yes,
Can you,
this probably said.
okay. Yeah. So I believe the slides are visible now.
Yes, it is visible.
Okay.
Carry on with your deliberation.
Okay. So good evening, friends. Good evening, everybody, and CA Sumantra Guha, our convener of the Accountants Library Study Circle, and Manish. I'm not finding Manish here. Suman Chaudhury, and all the members who are present here. Very good evening to everybody. In fact, after this fantastic
Good evening.
deliberation of, fantastic deliberations of Mr. Chhaparia, so there are a lot of intricacies, a lot of, again, thought-provoking things that he has presented. So now let me just get into the company law part, because time is also a constraint here. Now the topic of this session is recent developments in company law. And this is our third VCM, friends, of library. So we are back after a pause. Now, the recent developments of this Companies Act actually has carried a lot of things. I'll be trying to cover up the things in a little interactive way, in the manner that I have listed various questions, particularly on few topics which are very, very relevant in today's scenario. Because filings are all around the corner and we are into it. Now, of late, there are few important bills which have been passed by our parliament. Lok Sabha on 19 September 2020 passed this Companies Amendment Bill. And finally, on 22nd of September, Rajya Sabha has also passed it. Now, this particular bill, or rather it is an act, but again, President assent is left. So this carries the most important part of the legislation. That is to decriminalize, because previously what we found in every sections, in every provisions, so we used to get, intimidated. So that has been taken care of, and decriminalization of this entire legislation is on the way for two things. One is for the ease of doing business and ease of living. So these are the buzzwords in corporate scenario now. It also allows listing of Indian companies in the foreign stock exchanges and revokes the criminal provisions added to the Companies Act. Honorable Finance Minister tabled this bill actually before the pandemic broke down. So, but finally, this took about so many months to, pass in the Parliament. Now, this proposed amendment actually based on the recommendations of the Company Law Committee, which actually submitted reports in November 2019. You see here, recategorization of 23 offenses. There are 46 declogging penal provisions have been done. Recategorization of 23 offenses out of 66 compoundable offenses to an in-house adjudication framework. This in-house adjudication framework means the onus or the power is given to the central government, and central government means mostly the regional director, the jurisdiction and regional director. Omitting 7 compoundable offenses, limiting 11 compoundable offenses to fine only, removing the imprisonment part, recommending 5 offenses to be dealt with in the alternative framework. 72 changes to decriminalize and reduce or remove the penalties. 48 sections will be amended to decriminalize. 17 sections have been amended to improve the ease of living. Then your compoundable offenses are there. 7 compoundable offenses would be omitted. Serious offenses called the non-compoundable offenses. And these include the fraud, the injury to public interest or deceits. So this will carry on. And the legislations identified for amendments in the SURFACE Act, in the RBI Act, National Housing Board. So all these changes are in the offing. Now this decriminalization of minor offenses in 19 economic legislations will provide relief to MSMEs reeling under this COVID-19 pressure. Because if you see, about 17.79 lakhs of companies are there in the MCA database, out of which 66% are actually active companies. If you consider, and about 5.43 lakhs are already closed. So if you consider this angle, the other side is, very recently, we all know that government actually mooted the idea of providing about the COVID line loan or COVID line guarantee scheme, where actually 20% of the credit amount as on 29th of February 2020 was actually arranged to be paid to the MSMEs as a part of 3 lakh crore benefits or the stimulus package, which Honorable Finance Minister declared. And out of that, very surprisingly, it has been noticed that only 53% of the MSMEs have availed this. So the response is extremely lukewarm. Now, in this scenario, the impetus on the MSME's growth, because MSME is finally the backbone of any economy. So that's why all these measures have been taken. Now, we will be covering this Companies Amendment Act 2020. In fact, there are 2 aspects in this entire recent developments in the Companies Act or in the company law. One is about the change of perception, as well as all this decriminalization, then your declogging of national company law tribunals. So this is one side. And the other side is a regular practicing thing which actually have been proposed by various circulars in the COVID period, starting from March 2020 till date. I have tried to cover up these things, but naturally, as I mentioned, that the paucity of time is also a factor. So I'll try to cover these aspects more with FAQs, more with questions, and I believe that will be helpful. Now, to decriminalize certain offenses, but we have already gone through, empower the central government to exclude. This is again certain class of companies from the definition of listed company by SEBI, because mainly for listing of debt securities. There's a new chapter that is for the producer company, which has been introduced now, to set up the benches of this National Company Law Appellate Tribunal. Now we know that there is only one bench where it is situated in New Delhi, and we need to travel to Delhi to appear for the cases in the NCLAT. And mostly all the cases are now going to NCLAT, because finally either the applicant or the respondent, whoever is losing, is going to NCLAT and challenging the matter. So naturally, this requires a travel, and again, a matter of cost, at least pre-COVID days. Now VC hearings are going on, but more, NCLT benches are required, need of the hour. So government is now going to, establish this. Make provisions for allowing payment of adequate remuneration to non-executive directors in case of inadequacy of profits by aligning with the remuneration of the executive directors. Reduce provisions relating to charging of higher additional fees for default on 2 or more occasions, which was previously there under section 403. For defaults of more than 2 occasions, charges would be higher. So that relaxation has been given. Extend the applicability of 446B relating to lesser penalties for small companies and one-person companies. Exempt any class of persons from complying with the requirement of section 89, that is a beneficial interest part. To reduce the timelines for applying for the rights issues, section 62. To extend exemptions to certain classes of non-banking financial companies and housing financial companies from filing of resolution 117. Then the CSR spending. This is very, very important. Now, there is a relaxation that the companies which have CSR spending obligation up to 50 lakhs, no requirement of forming any CSR committee. And to allow eligible companies under 135 to set off any excess amount that you have paid more than what you're supposed to do as a carry forward benefit in the coming years. Provide for the window within which penalties shall not be levied for delay in filing of returns and financial statements. So you notice that in every move, the intention is to reduce the intimidating approach, which is very important for the legislation of a nation. Otherwise, the commercial growth cannot be made in a prudent manner. To provide for specified class of unlisted companies to prepare and file their periodical financial results, and direct listing of companies in foreign jurisdictions, which I have already mentioned in the beginning. Now, this is something which is again very important, and we all are handling. Now we are coming to that aspect, the application oriented approach now. And in case of this Companies Amendment Act, that is a huge, about so many provisions which have been changed, modified, but mostly in the penalty provisions and the decriminalization part. So in short, that was the thing. Now, in case of the application part, number one, very, very important, that PAS 6. Many of us actually do the audits of unlisted public companies. In case of unlisted public companies, there was an amendment, there was an insertion of a new rule, 9A. And it happened in 2018, but we did not care about this, many of us. There actually, it has been stated that compulsory dematerialization of shares. You have to have it. Now, you see this notification dated 22nd May 2019 mandates all unlisted companies to have it, to file half-yearly return in PAS 6 to the concerned register. You need to submit a register on a half-yearly basis within 60 days. I'll be coming to that. Now, reconciliation of share capital audit report on half-yearly basis. This is called, the form is actually known as PAS 6. Unlisted public companies, and it will be applicable with effect from 15th July 2020. Half-yearly audit report on reconciliation of share capital, which is required to be signed, certified by a PCS, practicing company secretary, or a practicing chartered accountant. All information shall be furnished within 60 days from the end of each half year for each ISIN. Now, this ISIN is actually a number which you need to obtain. This is actually a DMAT number, sort of a thing. There are agencies like KFintech, like other financial companies who will provide this. They are having their setup, and this number is a 12-digit code number, where the first 2 digits stands for your country code, then your 10 digits, 9 digits actually, 9 digits. 9 digits stands for the class of the, or the nature of the securities, and the last one is the check digit. So that is a unique number. You need to obtain that. International Securities Identification Number and period for which the return is filing. Now, details of the capital of the company. Rights issue, bonus issue, private placement. So all these things you need to reconcile. There should not be any difference. And if there is a difference, you need to clarify. And this needs to be actually intimated to NSDL or CDSL. Now, particulars of the total number of DMAT requests. So all these will be the part of the PAS 6. So this is something which you need to take care of. You please see this, because again, the secretarial audit actually secretarial standards actually carry this thing as a mandatory reflection in their audit report, if the qualification in their report, if it is not being done properly. Next is amendment of 28th August. This is about companies shall not be required to attach the extract of the annual return with the board's report in form MGT 9 in case the web link of such annual return has been disclosed in the board's report. So this is again a benefit or facility which is being provided. No need of again attaching the MGT 9. Now, circular number 10 and circular number 15, these two circulars actually considers about the CSR part. All these actually came during this pandemic period. In fact, if you recall, circular number 21, 2014, there, Schedule 7, it has been considered as a broad-based and interpreted and to be interpreted liberally. Now, the CSR, based on the above and considering the declarations of the disease as pandemic by World Health Organizations, this COVID-19 spending by any corporate is to be considered as a CSR activity. Contributions to claim cares fund shall also qualify for CSR thing. Chief Minister's Relief Fund is not included in Schedule 7. And it will not qualify as a CSR thing. Contributions made to state disaster management, it is there. Now, there are some other clarifications. Like, funds may be spent for various activities relating to COVID-19 for in the broader perspective for healthcare, including preventive healthcare, sanitations. So all these items should be considered in a broad-based manner. Salary and wages in the normal circumstances, it should not be considered because these are regular obligations on the part of the management. Payment of wages to temporary or casual or daily wage workers, contractual obligations, it is applicable to all company, irrespective of whether they have any legal obligation for CSR or not. So it is again not covered. Now, circular, I would request to please mute the microphone. Circular number 11 and 12, now coming back to this thing. This is something recent and the new tongue twister, you can say. This is
Hony, can you hear me? I think there was a networking problem on Animesh's side. So he has been pushed out of this platform. We'll be returning back.
Suman, are we on the hold?
Yeah.
Okay.
Sumantra,
কি হয়েছে বলো?
Animesh's বোধহয় নেটওয়ার্ক বেরিয়ে গেছে, আমি কল করছি।
হ্যাঁ, করো।
ये बंदे अंदर ही ने
जाएगा, उसका नेटवर्क का कोई थोड़े प्रॉब्लम हो गया था, तो निकल गया था। He's joining. He told me that he's joining. Animesh is back, I think.
I'm back. Sorry. Now, my presentation is there. It's visible.
No. You have to re-present yourself.
Okay. Please enable me.
Yeah. I have enabled it.
Have you done it?
Yeah. You are meant to. Yeah.
Just it. Is it coming?
No, presentation has not yet started, but screen share is. You click on the presentation.
Yeah. Not getting done. Let me just continue. Anyway, so let me just continue this thing. It's not coming up properly. I'm trying, but time is also important. So basically, I was just starting that fresh start scheme. In fact, fresh start scheme is actually, it has been introduced, and I'm audible though.
You are audible.
Hmm. Yeah. Now, this fresh start scheme is actually a benefit which is given to the companies who could not file the documents within the time, the defaulting companies. And to enable these defaulting companies to file the belated returns, belated documents, this FSS scheme is now in application. It is there this particular scheme is there valid till 30th of September. So not much time is left. But there is a grapevine that it might be extended. But I'm not confirming this right at this moment. But it is at present, for a few days, we are still in the process of enjoying this scheme. Now, what is this FSS all about? In fact, for any company, whether it is a foreign company, whether it is a foreign liaison office, it is operating as a liaison office in India, if it is a company, a subsidiary of a holding company or whatever. So they can take the benefit to regularize the documents which could not be filed earlier, and the defaults were there under this CFSS scheme. In addition, the scheme also gives the inactive company to declare themselves as a dormant company under section 455, or you can also regularize the thing, and finally you can strike off the name of the company, strike off the company. That opportunity, that benefit is also given under this scheme. In fact, if you recall, in case what we have found of recent past, that many of the companies, got actually striked off due to non-filing of the accounts, non-filing of the annual returns, and the directors also got disqualified. 164 is a section for the disqualification of the directors for non-filing case, where the directors actually have been debarred for 5 years to function as a director. Now, if this company's got deactivated, or it becomes inactive on account of non-filing of these documents, you can make it active by filing these. Not only the accounts, certain other documents also can be filed. Nowadays, another very important thing, which is now we all are facing, which is going on, DIR 3 KYC. That is a yearly ritual to upload your KYCs, either in the web-based manner or in a fresh form filing thing. The last date is 30th of September, mind it, don't forget that. So, if the director has not filed this DIR 3 KYC for previous years also, they can take this benefit of this FSS. In case if the company has gone into strike-off mode, you need to restore the company, because that strike-off restoration cannot be done by this FSS. But if who is the competent authority who is being empowered to do this thing? That is the NCLT. NCLT can restore the company status. But after restoration, you need to file all the previous backlog of accounts. If the company has gotten a backlog of, say, last 5 years or 7 years, all these things you can do if you have the FSS scheme in hand. Government is giving this one-time opportunity to regularize this thing. Now, here we can take some questions on this particular matter, like, can the deactivated director activate it through this scheme? Yes, he can file DIR 3 KYC, provided he has been deactivated only for non-filing of DIR 3 KYC, mind it. If he has been deactivated on account of section 164, that is for striking off of the name of the company or for the striking off of the company, then you cannot do that, because there is no options given. Whether any separate AOC 4 or MGT 7 has to be filed for companies under liquidation? No. There is no separate annual return or balance sheets or MGD7 is there. When CFSS scheme is applicable for the companies which have automatically struck off due to non-filing of annual documents, annual returns, whether it is applicable for them, the struck off companies have to approach the NCLT. That's what actually I just now mentioned. In case if the company has actually can a company also file its old annual returns for 3-4 years without late fees? Yes, everything is allowed without any late fee. Now, in case of LLP, which is under strike off or defunct status, can this file, can this take the opportunity of this CFSS? No. It is under strike off mode, it cannot be. A company already filed MGT7, but AOC4 could not be filed. Finally, whether for one particular form can the company approach to CFSS? Yes. In case of CFSS, it is also applicable to companies having the foreign companies having the liaison office in India. In case, what are the options available to company, the name of which has been struck off by the ROC, but is having the business activities for availing this scheme? The company has to approach the NCLT. Does this CFSS allows refund of the late filing fee and penalty which are already paid on the company filing made before March 2020? No, this it is not possible. In fact, okay, now can a company whose director has been disqualified can use this scheme? Now, if you consider, this is a very common case which has happened in many of the situations. Say, if there are 3 directors and 3 shareholders, a small company. Now they could not file. Previously, they did not file rather the accounts and the annual returns. And finally, due to non-filing for last 3-4 years, they got the notice and the directors got disqualified, all the directors. So what to do? Because as we have mentioned that Section 164 has got no relaxation. So the directors will be going for 5 years of inactive status or deactivated deed. Directors cannot function. So in this sort of situation, this is a very common thing which is now happening because for many reasons actually people want to revive the companies again. In this sort of situations, you need to approach to the jurisdictional ROC, and ROC has got the power to reopen from their back end and induct a person, specific person to get into the things done. So for that, you need to approach. Another situation which comes, like if there is any amendment that needs to be done in the already filed AOC4, suddenly you have noticed in the previous cases, like in this particular sort of situations, because say in 3 years, 4 years back, and you have taken the new assignment. So once you have started filing and after filing done, you notice that there are certain mistakes in certain AOC4. So what to do? In this sort of situations, you need to approach directly to the jurisdictional ROC with an affidavit by the directors about the errors or about the inadvertent mistakes which have been, committed there. And accordingly, only when the ROC actually reject this form, then only again you can file the same form once again. because in many cases what we have seen that the particularly the banks have noticed the mistakes, or you can also notice it, but for any sort of these sort of mistakes that can be rectified, that rectification scope is there. Annual returns as well as the auditor's appointment not done since 2015 April. What to do? Can they avail this scheme? All companies can avail this scheme, filing the belated documents. All these documents will not be carrying any extra charges. Now, next is about this particular scheme. There will be a form, CFSS form, that will be coming from 1st October. That form will be coming from 1st October. And once these filings are all done, then there actually you need to put the details, and accordingly you need to proceed there. But this particular fresh start scheme, it is a fresh start. So this fresh start is not applicable to strike off of the names have been applied for, or the amalgamation, the dormant company cases, the vanishing company cases, and the charge filing thing. In the charge filing delay, you cannot do this. But for that, a separate circular has come, and that will be covering shortly. And once the scheme, you enter in the scheme, you can also straight away apply for the dormant status, and also to strike off the name, strike off the company under STK2. The STK2 is the easier process of striking off instead of going into liquidation process, because now voluntary liquidation, voluntary winding up is no longer there in the Act. You need to go through the insolvency bankruptcy code. So, but for STK2, there you can go straight away without hassles. So that can also be availed with this CFSS thing. LLP settlement scheme is also there, circular number 13, 2020. And in this LLP settlement scheme, there immunity against prosecution, same thing, same provisions are there for the LLPs also. In case of modification charge, creations or modification charge, which you cannot bring in the CFSS thing, there 23, circular number 23 is there, issued on 17th of June 2020. The scheme shall be applicable in respect of CHG 1 and CHG 9. CHG 1 is for the normal charge filing, CHG 9 is for the debentures. So there two classes have been made. Date of creation or modification of the charge, there are two classes. One is if the charge is before 1/3/2020, 1st March 2020, but the timeline for filing such form had not expired under section 77. Or second category falls in between this 1st March to your 30th of September. So these are the two things, two classes. Now, in the first one, that is from 1st of March to 30th of March, 30th of your September. In the first case, this 1st of March to 30th of September, this period actually will be excluded. This is a period of exclusions as per the provisions. It shall not be reckoned for the purpose of counting the number of days under section 77 or 78. So the form is not filed within such period. The first day after 29th of February, it shall be reckoned as 1st of October. So I believe I'm clear that this period from 1st of March to 30th of September will be the excluded period. So whatever will be done, now that needs to be calculated from 1st October onwards. But one very interesting thing, in fact, this is also a gray area, that all these circulars have actually pointed out the cutoff date as the 30th of September. So we are not, I mean, it's not known till now what would be done after 30th of September if this pandemic continues in the same intensity. Next is the second case, that is period beginning from the, if your charge filing thing happens within this period. The period beginning from the date of creation or modification charge, any day within this period till 30th of September. This will be your period of exclusion. So these are the two things for which actually the charge filing thing will be, the benefits are given here. Now, it shall not apply to stage 1 and stage 9. Timeline for filing the form has already expired, or the timeline for filing the form expires at a future date despite exclusions of the time provided as the period of exclusions. And for CAG4, that is a satisfaction of charge. So in all these cases, your these circulars will not be effective. Another important order, that is about the meetings. This is also something which is very, very important in today's scenario, because of the fact that the new normal thing in this pandemic has actually taught us various, process of handling the meetings, and particularly the way your virtual meetings and your other audiovisual means, meetings by other audiovisual means, that is OAVM. So all these things are now in the picture. And in this perspective, we have got the blanket extension of holding the AGM. And I have considered if you consider the order of this 8th of September order of ROC West Bengal, where blanket thing has been stated there in that order, that this extension is given under proviso to third proviso of section 96(1). Now, in this particular section, or in this particular proviso, ROC has got the special, the ROC has the right to extend the AGM on any special reason. And this can be done for a period of maximum 3 months. And accordingly, it has been stated in this particular office order issued by the ROC West Bengal that no need of filing any GNL1. Previously, we were filing because of the fact that there was no blanket order that was given initially. Stating the reason, because we were keeping the time of sending the notice of the AGM, the 21 clear days notice. So all these things we are keeping, and accordingly we are applying to the respective ROCs for extension. But now in this particular order, after getting this particular order, no need of filing the GNL1. But surprisingly, only a few days back, I got in one of the cases when I filed this GNL1 for a particular party. Now, still ROC is raising objections and resubmissions on certain points, and accordingly they have instructed to rectify the mistakes, and the mails are coming. Probably this is happening because once you have filed the GNL1, so unless that has been taken care of by the department level, so it keeps open that particular application. So to rectify this thing, they are, and if you get any sort of these sort of mails from the authorities, my suggestion that in spite of knowing the fact that no need of filing GNL1 for availing this benefit of extension, but please comply with whatever the authority is asking for. Next is that pending applications and rejected applications will also be covered. And here the deeming provision, this provision is a deeming provision. It is deemed to have been granted without any further action on the part of the company. This has been clearly mentioned in the office order, because there are certain confusions which now spreading in the market that in spite of having this order, we need to file that GNL1 again. Here it is clearly mentioned in particular office order that approval for extension is deemed to have been granted without any further action on the part of the company. In case of this meeting, holding of this meeting through conferencing, video conferencing, or what is known as OAVM, again, some new words, other audio visual means. So this actually is going to, or this has happened for the first time in our company law arena. With the advent of this Companies Act 2013, we have got the provisions of holding the board meetings in visual mode, audio visual mode, or in video conferencing mode. We have got that, section 173 and rule 3 and 4 of the company's meetings of the board and your powers rules 2014. They have allowed these rules 3 and 4, rule 3 and rule 4 have allowed this to hold the meeting over VC mode. But this was not present in case of AGM or EGM, which is very, very important in today's scenario. In fact, tomorrow, our accountants library will be having the annual general meeting, and this will also be held in video conferencing. So we all are getting acclimatized in this new normal scenario. In this particular video conferencing process, in case of the board meeting, there we have seen that the process, like your participations of the directors, should be done and in this video conferencing mode, and the process would be arranged in such a way that the recording of the proceedings should be there, and there will be a two-way communications. There will be a two-way communications. Then your rule 3 of the company's rules deals with the procedure for convening and conducting the board meetings. And now in this particular, so about this board meeting, conducting of the board meeting in the video conferencing mode, this I'm not going into details because of the fact that this was already there. What I am trying to put forth here is the holding of the AGM and the EGM through video conferencing. There, very importantly, there are about 6 circulars which are there in the MCA site also. Please check it. Circular number, please note that. Circular number 14, 17, 18, 20, 22, and 28. Out of that, circular number 14 and circular number 20, very, very important. Now, please go through the circulars, and there in details, very exhaustive circulars, and there in details they have covered this holding of AGM or EGM in the VC mode. Actually, Act does not provide the shareholders meeting in the VC mode. It only makes the provision of the e-voting, section 100, and if you recall, section 108, postal ballot, 110. So e-voting for the first time, VC voting for the first time. Now we can discuss about certain questions on this. Can the companies hold the general meeting in a hybrid mode, that is physical as well as video conferencing? Yes. Why not? There is an option. It can be held in that way. What is the relevance of this video conferencing or this OAVM for unlisted companies with limited number of members? See, actually, in case of limited number of members also, this can be done. If the members are present in far-flung areas, this can be connected. Now the question comes at times that the members are, sitting in a village area where the connectivity is poor, so the VC is not working. So is there any other way? But there is no relaxation there. That cannot be taken care of. Is it mandatory to hold the general meeting through VC also during the business hours? Is there any relaxations there that you can hold the AGM at any point of time? No, there is no amendment in the Act. Only a facility is being added. So during the normal business hours, you need to hold the AGM or EGM. How to accommodate the shareholders who wants to ask questions in view of the large attendance of the shareholders throughout the length and breadth of the country? Yes, in case of large number of shareholders, large number of members attending, first thing is that the platform which the company will use, it should be a very robust platform. The process or the arrangement there should be both way arrangement. That is, the member can raise the questions and can get the answer back. Now, in case if the shareholders are large in numbers, generally what happens, time allocation is done. For that, you can, before the meeting starts, you can specify you need to have a slot, and absolutely at the discretion, this I again repeat, absolutely at the discretion of the chairman of the meeting, this happens. Why the proxy provisions are dispensed with in case of general meetings through video conferencing? This is very interesting move, that there is no proxy requirement now. This is the direct fallout of this new normal. Because what is the requirement of the proxy? This e-voting, your VC thing can reach up to any extent, up to any place. So there is no requirement of the proxy provisions now. All resolutions passed at the general meetings are to be filed with the ROC within 60 days. Very important. All resolutions passed at the general meeting are to be filed with the ROC within 60 days. All these resolutions. Are there any restrictions in transacting any business at the EGM? See, actually, an AGM held through video conferencing. Actually, this is being, if you go through the circular number, the April circular, there actually it has been mentioned for all sorts of things it has been allowed. Is it required to give venue of the meeting in the notice? Yes. Venue of the meeting, actually that should be the deemed venue. That should be the deemed venue, because the physical presence will not be there. But a venue needs to be given there in the notice. Poll. How poll is to be conducted? Where a company is not required and has not opted for e-voting, but has more than 50 members, and is not possible to go for vote on show of hands. Yes. See, in these sort of situations, if the voting is required, and if you do not have the e-voting thing, then you can create a dedicated communication line in the form of your email, through which you can make the voting process. You can create Google Forms through which you can do the voting process. So these things are flexible, but you need to have a dedicated communication channel for this. Conduct of AGM through VC or OAVM, and the companies mentioned in their AGM notice that the company holds a right to restrict the number of speaker shareholders depending on the availability of time. So can the company restrain a member or the speakers? They can. They can, considering the paucity of time. Again, the discretion of the chairman, is supreme here. Then the presence of the auditor mandatory in the AGM via VC or the OAVM. Yes, auditor will also remain present over VC mode. Now, how can the companies keep registers open for inspection at the AGM held via this VC mode if the company does not maintain the registers in electronic form and nor the company has scanned the same? Yes, for this, actually, this is again a difficult part because of the fact that at times it might be required to produce certain documents or to show certain things. For that, what is suggested that you need to have a dedicated your folder or dedicated electronic vault where you can keep this all these documents, and the members at their own will can have the access from their own. So that virtual vault needs to be created. Otherwise, you cannot produce these things. What are the consequences if during the AGM through VC or through OAVM, the chairman gets disconnected? Just now it happened with me. I got disconnected due to poor net connectivity. So, and he is unable to join again. How can the company proceed with the AGM? See, without the chairman, the meeting cannot proceed. So, but for, a shorter pause, it is okay, it is acceptable, but not for longer pause. And in that case, the meeting will be adjourned. Do shareholders and directors have any rights to ask recording of AGM? This is again something which is important. Whether shareholders and directors have the rights to ask recording of the AGM conducted through VC. See, there is no provision in the Companies Act where the recording of the AGM needs to be circulated to the members. There's no provision. It can be done, but that transcript should be for in-house, not to distribute to the shareholders, in that way. One of the VC meeting could not be recorded due to technical difficulties, but has captured screenshots showing a proof of meeting held and agendas discussed. Will it suffice whether we are 100% compliant? If not, what needs to be done? The agenda included approval of working capital facilities, borrowing from the banks. Yes, this can be done. This can be done if the screenshots are there and if the approval has been taken. So this will be done. This can be allowed. Then one director could log in, but before the meeting starts, got disconnected and could not rejoin. Whether he can be deemed to be attended the meeting. He tried to join, but before the meeting starts, he got disconnected. No, in that case, his presence will not be considered. In case of the closely held unlisted company, having say only 10 members. So how the resolution would be passed by voice, by show of hands, or the e-voting facility, which is mandatory for such companies. In this sort of situations, you can do any sort of arrangement. You can keep open the chat box. You can raise hands in the raise hands portion in the platform where you're using. So all these things can be used. There is a flexibility. There remains a flexibility. whether the interested directors or the related party director is required to log out from the meeting conducted through VC or OAVM during the discussions on subject matters of resolutions relating to such contracts, means the related party transactions. In case of related party transactions, whether the directors or the interested director can remain present in the meeting. This is actually in case of, if you consider the physical thing, there what happens that the director, the interested director, he cannot vote. Second thing, he can remain present, he cannot vote there. And he cannot take part in the meeting. So in this case also the same thing would happen. In case of the board meeting held through video conferencing for approval of the financial statements, can the directors sign the financial statements on the same board meeting date, or physical copies should be there for signing? This is a tricky thing. The board meeting where the board will approve the financial statements. The financial statements are not there. Actually, in the virtual mode, it is there. And how can that be signed? So the confirmation should be given in that meeting, and that can be signed on a later date. Do we need to file any specific form with ROC for holding these meetings over VC? No, there is no requirement of any form, but these things should be mentioned in your notice. And for that, specific circulars, specific sections, these should be mentioned very clearly in the notice that this will be held in the video conferencing mode or in a WebVM mode. And the link should be shared also. If one of the directors is the Indian director and rest all other foreign directors, in case 100% Indian subsidiary of a foreign entity, all the directors are located in various countries, say about 4 or 5 countries. Now, how can they manage board meeting, and what will be considered as the place of board meeting? So who is actually initiating the meeting? That needs to be considered, because I have mentioned that the venue of the meeting is a deemed venue. So from wherever this notice is getting originated, that will be considered as a place of holding the meeting. How to conduct the board meeting in case of the company whose directors are from rural areas where there is lack of connectivity? There is no excuse for lack of connectivity. Sorry, there is no relaxation. You need to arrange for the proper network, and you need to be a part of the new normal. Guidelines of the state regarding number of persons should attend a program will affect the holding of AGM or say extraordinary general meeting. Generally, they differ state-wise. Then what will be the outcome for holding of AGM or extraordinary general meeting? So this actually, again, a physical presence is no longer required. So over the VC platform, there is no restrictions. So only in that way, your virtual presence will be considered for holding of the AGM or EGM. So this is about the various questions that I thought would be relevant for today's session. Now, already it is 7:13. Should I just continue for just 5 minutes, Sumantra? Are you here? Hello?
Yes, Animesh, 5 minutes.
Just 5 minutes. So, before concluding, again, I'm going back to Companies Amendment Act, where actually, because I forgot to tell these 2 important changes. There are a lot of other changes which I'm not going into detail, but there are 2 important, very important changes which I have noticed and to share it with you. One is about the section 143(12), if you recall, there the fraud when the auditor has reasons to believe, that the fraud has occurred, he needs to inform the central government. Now, in that case, previously, if it is not being done, the penalty was from 1 lakh rupees to 25 lakh of rupees, which now has been reduced. In case of, that is 143.15, in case of the financial auditor, the cost auditor, or the company secretary, even the secretarial auditor, for the listed company, he is liable to penalty of 5 lakh of rupees, and for any other company, he is liable to penalty of 1 lakh of rupees. So this has been rationalized. And in case of another important issue is, in case of the liquidation, when the company is in liquidation mode, that is also important. The liquidator needs to confirm comply all the provisions of the law. Otherwise, previously, he was supposed to be, for non-conformity, non-compliance, he was supposed to be penalized for 5,000 rupees for every day of default. But now it has been, as a part, it has been changed or shifted to insolvency bankruptcy code, where any default will be actually on the part of the liquidator, will be part of the proceedings under Chapter 6 of Part 4 of the IBC. So in this Part 4 of IBC, there the liabilities, there the penalties, the non-compliance provisions, they are all given. So accordingly, the penalties would be meted to the non-compliant liquidator. And friends, this is the last one is in case of Section 172, there is another change where 172 actually, if a company is in default in complying with any of the provisions for which no specific penalty is given, no specific punishment is allotted. So in that case, the penalty provisions was 50,000 to 5 lakh of rupees previously. But now it has been rationalized, where it has been stated that every officer of the company who is in default shall be liable to a penalty of 50,000 rupees. And in case of the continuing failure, with a further penalty of 500 rupees for each day during which such failure continues, subject to 3 lakh of rupees in case of a company and 1 lakh in case of the officer who is in default. So this is actually Section 172 change. So, and in most of the scenarios, we'll find that these changes are mostly in the lower, lowering the your penalty provisions. So with this note, I take the opportunity to conclude my session. It's already 7:17. So I believe that I have tried to consider mostly of the question answer things. We will definitely share this these slides. I'll ask the organizers to circulate this thing if you wish. And at the same time, please go through the circulars, which actually I have mentioned previously, for application part of the understanding the application part of the holding of these meetings and your annual general meeting, board meeting, etc. So with this note, give me the opportunity to conclude my session. Thank you all for giving this patient hearing. Any questions, please come up with. So we will all enrich from that.
Yes, if there are any questions, one can ask. Yes. A quick 1 or 2 questions, 2 questions maybe at the most.
I'm
Suman,
sorry
one
that
chat box ka question hai?
I could not share the PPT finally due to certain technical problem from my end.
No, but we will be
That I can always,
circulating the
yeah,
PPT to
this,
all the
right.
participants, both
Absolutely.
Chhaparia's
Absolutely.
PPT as well as your PPT.
Absolutely.
There is no specific question, but there are three requests of one type from 3% to share the PPT.
Sure.
So, Animesh, I have got one question. Now,
Please.
since section 96 still says that 15 months gap, you cannot hold two AGMs more than 15 months. So, if a company who has held its AGM on 27 July 2019, it has to hold its AGM this year also by 26th October 2020. My understanding is absolutely correct, I believe. Yeah?
Yes. Correct.
So that
That
clause
is true.
is still there, and
That clause is
that
there.
has not been taken away because section 96 states that 15 months is still there, so there is no issue on that. Actually.
Right.
Right. Okay.
Over enthusiasm has got no excuse.
No. I understand.
So always,
Because the when this circular came, everyone missed out on certain points that they felt that everything has got extended to 31st December. It is not that. So for companies who have had their AGM earlier in the earlier year, they will also have to hold the AGM within 15 months from the date of the earlier AGM. That is the main thing.
actually, we particularly for these small companies, where we are the auditors as well, we are the starting from the secretarial work to everything. This is the other side of the scenario. There we keep that 30th September as a blank date. And
there is a question. Is there
yes,
any amendments for issues of shares for consideration other than cash?
of recent,
Yeah.
not coming to my mind. Is
I
there
don't think there is any change, I believe. No?
any amendment for issue of shares for consideration other than cash?
The Surajit Sengupta has put up this question.
Yes. It's not coming, but there are certain procedural changes. But no, it's not in that way. It's not a significant matter as such.
So, Suman, if you are there, then you can kindly propose a formal vote of thanks and we can close today's meeting.
Yes, thank you, Animesh, giving a excellent deliberation over the topic. And I think you have been quite impressive in your expression, and you can explain us in a very lucid manner what are the things coming up in the coming future and what are the recent amendments. So we'll be loving to hear you many times more in our coming VCMs. And on behalf of the Accountants Library, I would thank you. I thanks all the members present over there today, and also Mr. K.K. Chhaparia, who has been our other speaker on the two specific and two pertinent topics. So thank you very much for giving us this time out of your busy schedule, because whenever we think of Animesh, he is very much busy. So thanks for giving time to so much time, because he has given us 3 hours, only 2 hours for giving his deliberation, and his PPT is very elaborate. So people are requesting to.
No, but I could not. I'm sorry that I could not share the entire stretch. I mean, entire portion of the PPT. But
Yeah.
again, please, I'll definitely share this.
Just request Smita to forward
Yes.
all the person who has
Yes, to all the participants,
So all the participants.
today to circulate this PPT of yours and also Chhaparia. So thank you, Animesh, and also you are being the president of our accountants library. So being a president has a very good year, but due to the pandemic, but you have shown the way, and we have done already 3 VCMs in this. And we thanks all the participants and you and very.
Before just concluding, I just want to thank also our dynamic and always in touch our convener, CA Sumantra Guha, because the way he has carried on about this holding of the this thing, the BCM, and definitely with the entire team of all of us, but his leadership, his guidance definitely has, proved really beneficial for the study circle. Thank you, Convener. Thank you, Suman.
Thank you.
Thank you, everybody who are present here, all the participants. So
Thank you.
with this,
Thank you.
I think with this, let us conclude the session then.
So we are stopping the program. We are also stopping the recording purpose.